everyone, welcome back to the Daily Dive. Today on the show, we're chatting with Jeff Wareham, contributor to the Deep Dive and always coming up with interesting hot takes on all things capital markets. Hey Jeff, welcome to the Dive on video.
Well, thanks for having me on, Cassandra.
Okay, so the Trudeau government recently announced the federal deficit will reach $381.6 billion by the end of March. They are expecting to follow up with a $120 billion deficit for the post-pandemic recovery year. So I have to ask, do you think the government is past the point of caring about deficits?
Oh, I absolutely do. I think that the shift has been from, worrying about deficits to just taking advantage of cheap debt. And, I don't think I think we'll be years before we see a G7 government, not just Canada, balance their budget, if we ever see it again. When governments can borrow at almost zero and throw the money back into the economy and put it into voters' pockets, why on earth would they be fiscally responsible and to pay things off?
Do you see any kind of return to a gold standard?
No, I don't think so. I think that there's a possibility that you may see pressure around the world to have current as some sort of a cryptocurrency or something like that that's tied to commodities or to real assets. But the fact is that the gold standard had its time and its place, but it's too narrow. Government currency valuations based on the ability of governments to tax and to have assets back things up. Canada's currency should be really strong because we have such an abundance of resources and riches as a country, from farmland to gold to uranium to rare earths, you name it. But I think that the gold standard's too narrow. I think it'll be, it ended for a reason, and I don't think we'll ever see that again.
How do you protect your wealth in an environment with unlimited easing?
Well, I mean, unlimited easing is by its nature inflationary. Having said that, if the government wasn't in the market, we'd probably have massive deflation. But in a world where governments are not, in any way constrained from borrowing, as fast as they can, what that has is there's more money out there, a currency out there all the time. There's not necessarily more hard assets. So just basic first-year economics will tell you that if that's happening, then the relative value in those currencies of hard assets is going to go up. So I don't think it matters if it's timber or construction material or houses or farmland or gold or platinum or uranium or copper. Hard assets have to go up in value because there's only so many of all of them, and it seems like there's an unlimited supply of new government paper, new government debt.
So if we break gold down into its four demand components, investment, technology, jewelry, and central banks, where do you see demand most likely to either fall or pick up over the near term?
We've seen a little bit of a short-term drop in the last couple of months in monetary demand coming from the central banks. And anybody who really likes this stuff, I'd encourage them to sign up for the World Gold Council's newsletter. That's the principal thing that I follow on it. But, honestly, central banks around the world are still committed to buying gold. Russia, China, places like that have bought gold for years. And I think you'll continue to see them do so. I think the important thing to watch for is a return to jewelry demand. This pandemic has not hurt the wealthy. Jeff Bezos has gotten richer. Elon Musk has gotten richer. It's the poor guy down the street that runs a convenience store or a bar or a restaurant that's gotten clobbered. And it's the wealthy that are your jewelry consumers. And there is a massive, I believe, undersupplied demand coming back to the market for jewelry. The jewelry retail demand dropped off significantly at the start of the pandemic, and largely the demand for manufacturing, because so many places got shut down. If we see retail demand come back into the market, people buying jewelry again, you could see gold surge much higher. And that extends to other precious metals, diamonds, you name it.
The rhetoric online has been Bitcoin versus gold, almost like you can't invest in both. What are your thoughts on Bitcoin as an investment?
Well, I don't think Bitcoin's an investment. I think Bitcoin's a fraud. I think it's a speculative vehicle. It's a lottery ticket. You can make money on Bitcoin. Don't get me wrong. People have made lots of money on Bitcoin, but Bitcoin is purely a speculative vehicle. It's the tulip bulb of the 21st century. To go back to things that have happened in history. There was a time where tulip bulbs, reached a value equivalent to houses in Europe. Now that doesn't make any sense, and neither does Bitcoin. You can't buy anything of consequence with Bitcoin. You can't find a Bitcoin ATM. It's not an alternative to your PayPal and most purchases you do on Amazon. So you've got to ask yourself, they don't have the power to tax like a government currency. They don't have anything hard backing it up other than these theoretical Bitcoins that are being issued by Bitcoin mining, which again is just I think a complete fraud and a mislabeling of things. It doesn't exist. Bitcoin is a speculative vehicle that is 98% owned by institutional investors. One of these days the bubble will pop and institutional investors will go to the other side of the trade, and the retail investors that are holding Bitcoin are likely to see it, if not go to zero, go pretty darn close to zero and to be wiped out by it.
Well, thanks so much for joining us on the show today, Jeff.
Oh, it's my pleasure.
And for our viewers at home, don't forget to like and subscribe. I'll see you next time on The Dive.